Good afternoon, this is Brad Dennis with BIS Commodities with your wrap-up for the first week of December. This week we started off, Sunday night's trade was much higher in ags. We had seen what had happened with the G20 meeting, and on Sunday we had a lot of positive information flowing out of the administration talking about how well the meeting went. So Sunday night we gapped higher in corn, beans, and wheat, and beans put in their high for the week in that first 10 minutes. When we got to Monday, we weren't seeing the Chinese agreeing to what we had thought had happened at the meeting. So without the Chinese agreeing to what we were hearing, there was doubt in people's mind of any kind of agreement going on. So with that being said, we saw the market come off some. We still look at this though as a technical pattern. You still have gaps in the charts. We'll have to see if we can fill them or not. Couple things with that meeting. Couple things that really we know going forward is that there's a 90-day negotiation period. Just to tell you how sensitive the market is to this stuff is, this morning you had Kudlow, economic advisor to the White House, come out and say that we might extend that 90 days if talks are going well. And then Navarro, another trade secretary, comes out and says, hey, if nothing's done after 90 days, we're going to slap tariffs back on. So there's really, nobody knows exactly where this deal is, where it's going. There are some things we know about, and those things are this, that the 25% tariff on U.S. beans is not coming off until there is something that is agreed upon between the two parties, and that'll take 90 days. So for right now, the only person that's really going to be buying U.S. ag products is Sino-Grain, because they get reimbursed by the government on that 25% tariff, or they don't have to pay it basically. But the regular crushers and importers, they would still be paying that 25% tariff, and in their eyes they'll go for the cheaper product, so Brazil will get that business. Another thing too, so this is at the front end of the week. Latter end of the week, you have the Commerce Minister from China saying, yeah, we're going to buy some ag products, we're going to buy some energy, starting to agree with what we heard at the first part of the week. They were very quiet Monday, Tuesday, Wednesday, and then Thursday they started to say, hey, yeah, we're going to do some of that stuff. But in the same time frame, we find out that a Chinese executive, the CFO for a telecommunications company, was arrested in Canada, deported to or extradited to the U.S. on charges of basically taking U.S. goods and then reselling them to Iran when there are sanctions on Iran. So now this is one of the largest telecommunications companies in the world, and to have this executive now in the U.S. and possibly being charged with these crimes, people think this will screw up all the trade talk that's going on right now. It seems like the Trump administration is in disaster mode. They're saying, hey, no, this isn't going to wreck anything. They're trying to keep the market up, and they're just not. There's just not a lot of confidence in this, and I think that that's why you're seeing the outside weakness, and we're trading a little bit off of the macros right now too. As far as our markets are concerned, corn, beans, wheat. Corn, 370 to 390 in March corn. That's your range. We need something big to happen to be able to get outside of that range. Some people are saying, that Sino-Grain will come in and buy some corn. That would be important, but does it get us over that 390 level or not? I don't know. It's going to be tough to do. Beans, $9 to $9.25. That was our range this week. We'll probably sit in that range until you see Sino-Grain come in, and there's rumors of 5 to 10 million metric ton that might be done. Now, nobody wants to be short this market because they know that this business can be done. But this is business that still is a long ways away from satisfying what we have penciled in for export sales for the year. So even if this business does get done, we still have lost so much that our demand scenario on our balance sheet is still going to be going down. And we're going to see that probably in January. We do have a supply and demand report on Tuesday of next week for corn, beans, and wheat. Typically, the December supply and demand report doesn't see too many changes. It's not until that January one. So I don't see a whole lot of fundamental changes on Tuesday, especially with tariffs still in place. They're not going to change that export demand unless the tariffs are gone and they say, hey, all right, well, maybe we will do a little bit more bean business. We're so well behind, I don't think that they can add that in there anymore. So, like I said, we've got those two scenarios going on with the corn and beans. We're really watching to see what happens with these trade talks. In the wheat had great export sales numbers today. They were delayed a day because of the funeral on Wednesday, but we had great export sales. We had an announcement of business done overnight too. So this is kind of starting to reassure the trade a little bit that, hey, this business that we thought could come our way is starting to come our way. And now with the high close that we saw in wheat today, up around that 30 level, line X is starting to cross line Y. So we're seeing a little bit of short covering up here. That's giving us a higher price. And we're starting to see the market move a little bit on the upside there. That's going to pull up the corn as well, I would believe. So basically when you're talking about corn, beans, wheat, I know that we have a supply and demand report, but you just got to listen. And in the morning it could be one thing, in the afternoon it could be another thing on these trade talks. And that's basically what a lot of people are basing their bets on. Other stuff, live cattle, they were up $1 this week. We really haven't seen too much trade. It's about 3:40 in the afternoon. Saw a little bit of trade. There's some rumors about 119s out there. I think that it's just that. It's just rumors. Doesn't seem to have, or the packer doesn't want to be paying up too much right now. So I kind of look at steady trade this week and maybe a little bit off next week. But it's not going to fall out of bed, and I think you've still got a little bit of a climbing market going into the end of the year. Hogs last week in export sales, we saw some business done to China. This week we saw some more business done to China. So that's definitely a positive, even though there's a tariff on there, and we're seeing them come in and purchasing our product. The problem that we're going to see next week is we've got December's going off the board. I've got a country price of around 50. I've got a index price right around 56, and that's where we're trading in Ds. But we have February's well above that at the 64, 65 level. So we'll see how that, if we have any convergence down on that. Crude oil. Another one, like the other markets, it's a headline-based market. We saw OPEC get together this week, December 6th. They were talking about cutting back supply to support oil prices. It wasn't until this morning when they had Russia come in and agree with them to cut back a little bit to the tune of 1.2 million barrels that we did see a rebound off of that 50 level in crude oil, which makes sense. And this week also, we saw our first drawdown in our weekly EIA data that kind of signaled, hey, maybe we went down to 50. Maybe that's the support level right now, and we'll see how we kind of finish out the year. What's going to weigh on oil is stock market down. With that stock market really getting hit hard this week, that's going to be kind of a little bit of a wet cloth or a cloud over the crude oil market. After that, we're looking at Fed governors. All right, so what other stuff can we throw at this market? Well, the Fed has been acting fairly dovish as of late. Powell came out and in a speech said that he's just a smidge away from neutralizing rates, when everybody thought that at this point they were still a ways away. So that's turned the Fed a little bit dovish. We've seen notes rally. We'll see if that dollar can break a little bit more. We had non-farm payrolls. We were looking at 190,000 this morning, came in at 155. So with that lower number, you might see them back off on their possibility of 3 rate hikes next year. Maybe it's only 2 or so. They just have to, when they're predicting these things a year out, they make changes to them. And we just have to see what the economy is doing. And it looks like right now, with the tariffs in place, we are seeing a slowing global economy. I know a lot of people are talking about the inverted curve and that signaling that we have a recession. Not always the case. Not always the case, but it is telling us that we are slowing down. Now, if we do go ahead and have these rate increases as advertised before, that should bring us closer to that neutralization and should take that inverted curve out some. Like I said, we do have FOMC meeting at the end of December. They'll tell us what they're going to do with rates. It's expected that they raise another quarter or 25 basis points. It'll be interesting to see what they feel is their outlook for the next year, though. So you can look at all the fundamentals from the supply and demand report next week for corn, beans, and wheat, when in reality it's tweets and headlines that are dictating markets. And unless something else gets done, stick in those ranges. 370, 390 in March corn. Probably $9.25 to $9 in the beans until we see some actual business get done. And what we want to see is we want to see the P&W basis get firmed up a little bit. Then we know that they're buying a little bit, and that might energize the market. So these are the comments for the end of the week. If you have any questions, look us up on the web, www.biscommodities.com, or give us a call here in the office, 1-800-373-2525.